G'day and welcome to Tradies Insider. I'm Damian Coory. Now, I know you're used to seeing Bryn Harwood hosting Tradies Insider, but this time I'm in the chair because Bryn is going to be one of our guests on the show today. And it's a very special and important topic for everyone in small business these days. What to do if you're staring down the barrel of a pretty hefty tax debt after COVID. And with inflation and all the troubles with the economy right now, you're wondering how you're going to pay it off.
This is Tradies Insider.
There's been a very clear change of tune from the Australian Tax Office since July towards small businesses and tradies. And they're not hiding the fact. We're going to discuss with two experts today how you can protect yourselves from the crackdown and use other new laws to really help reduce your tax liability and to get your business back in the black. Before we get into it, if you're interested in this type of content, hit the subscribe button and also tap the notification bell. That way you'll be instantly notified as soon as we post a new video. The ATO's Assistant Commissioner, Gillian Kitto, says that during the COVID pandemic, the Tax Office shifted to trying to provide stimulus payments to small business and assistance with tax. But now, according to a recent report in The Australian, Ms Kitto is getting tough. It's now time to re-establish the culture of paying tax on time, she says. We must draw a line in the sand to protect the Australian community and other creditors and to ensure a level playing field for businesses who do the right thing. The Tax Office is owed about $33 billion from small businesses. And since July, they've been issuing notices of intent to tens of thousands of businesses that have got a tax debt of $100,000 or more that's overdue by more than 90 days. If those businesses don't pay up, then they will be named and shamed by the ATO by having their debts disclosed to credit rating checking agencies. And it's already been happening. Ms Kitto told The Australian that the only way to stop a business's tax debt becoming visible in credit rating checks is to pay or engage with the ATO. Those who show continued and ongoing disregard for their tax and super obligations will have their debts disclosed. While we don't take disclosures lightly, consequences will apply to businesses who refuse to pay or engage with us. So you either pay up or engage. But what do they mean by engage? Well, one way a lot of small businesses and tradies have been engaging with the ATO is through what's called small business restructurings, or SBRs. This is a new option brought in during COVID that could see your tax liability cut significantly. Lots and lots of small business owners are doing these restructures right now. And if you have a tax liability that's seriously hurting your business, so can you. Here to tell us how is a face you're all very familiar with on this channel, Bryn Harwood from Tradies Accountant. G'day, Bryn.
Thanks, Damian. That was awesome.
Good to have you here.
Yeah, amazing.
And we've also got a very special guest in the studio with us today. It's Roberto Crispino. Roberto, thank you very, very much for joining us. You're with Hall Chadwick Accountants.
Yes, I am. I'm a registered liquidator with Hall Chadwick, and it's great to be here.
So, guys, Bryn, I'll start with you. I mean, basically, there's been a big uptick in the number of people coming and inquiring about these SBRs, right? How big an uptick have you seen in the last month or so?
Well, I mean, you know, a lot of people are unaware that the SBRs are out there, and I mean, that's the purpose of this, to get awareness around it. But what we've seen is that the people that do pass the criteria, a lot of them are starting to look at the small business restructure because it's a better way for them to be able to deal with the creditors and come out with an outcome as opposed to the old regime.
Yeah. So what is an SBR? Give us a quick definition.
Well, the small business restructure essentially means you're able to restructure your debt with your creditors. Right. And you can do that without having to formally appoint a liquidator, so you don't have to go through the process of going into a voluntary administration. You're able to have a look at the debt, engage with your accountant, make sure your compliance is up to date, and then engage with a registered liquidator to make sure that you pass all of the criteria. And if you're able to do that, then you can go back to your creditors with a pack. Okay. So the pack is essentially a deal that you can make with your creditors.
Okay, right. So it's basically just getting all the people that you owe money and sitting down with them and saying, look, this is our capacity to pay at the moment. We want to keep the business running. We want to keep it viable. And in order to do that, we have to clear this debt. Mm-hmm. So it really is a bit of a short-term thing that the ATO brought in because of COVID, right? Do you want to tell us a little bit about how that came about, Roberto?
Yeah, so the COVID pandemic made the ATO shift their focus for a short period of time, and they started to go through a process of not collecting debt as they used to historically.
Right.
And once the conclusion of the pandemic and things have gone back to normal, they've put their finger back on the button.
Right.
But being mindful of what that is going to do, they've brought in this SBR regime to assist businesses with fixing up their tax debts.
Okay. So basically we had a period during COVID where the tax office was kind of pulling back, right, and saying, we'll let you just keep going if you're having trouble. We're not going to be chasing tax debts too much. And they really did pull back, right?
Oh, 100%. I mean, I think through the COVID period, essentially liquidations and administrations, went down closer to nil because during that period, I guess the government didn't want a lot of businesses going into insolvency and then a lot of people losing their job. Trying to get back into the workforce is hard. So they wanted to keep these smaller businesses being able to run and not have to go through the insolvency process.
Yeah. So trying to stop businesses shutting down, people losing their jobs, I mean, it's all very worthwhile stuff. But as of July 1, the new financial year, this year, we're now seeing these sort of comments coming out, back to normal, guys. You've got to get your... And I suppose a lot of people got kind of used to the more relaxed regime, right? So
I think some businesses might have been conditioned on a more relaxed tax office in the collections.
Yeah.
But that's definitely shifted in the last few months.
So the SBRs have just come in to sort of say, well, okay, you have this option now if you're carrying a big debt, not just your tax debt, but all creditors, right?
All creditors, yeah. And I mean, well, Roberto would be able to explain the criteria better, but it has to be under $1 million in debt. So I mean, when you say small business restructure, we really are looking at the smaller businesses, not the big companies. You're looking at businesses that have under $1 million in debt. There's other criteria involved with that as well, Roberto?
Yes. So other than the $1 million liability limit, also your tax lodgements need to be up to date before you put forward the proposal, and superannuation to employees needs to be paid.
Ah, okay. So there's some conditions.
There
you can't
are
just
some
jump on the bandwagon. You've got to be doing the right thing, demonstrating that you're doing the right thing, and your intention is to. You've also got to demonstrate that your business is a viable, ongoing concern, right?
Yeah, so a majority of the SBRs, the directors tend to pay these proposals out through ongoing trade. Creditors, and especially the ATO, would like to see, moving forward, what your cash flow is like, that you're able to service these payment plans.
Right, okay. So the goal is really to make sure that people aren't losing their jobs, that these businesses are viable, can continue. It's not a get out of jail free card in a sense. You've actually got to demonstrate that you're on track and you're doing the right thing, yeah?
And I think, Damian, you said it at the start when you said you've got to engage with the ATO.
Yeah.
So obviously this is a way to engage with the ATO. If you've got this debt, you're really struggling, cost of living's obviously gone through the roof, just about everything's gone up, interest rates are going up, it's harder. So you've got this ATO debt and, some people might put their head in the sand and not want to engage at all and hope that it goes away. But I think the emphasis is engage with the ATO, then engage with your accountant. And if you are eligible, then the SBR might be an option for you.
A lot of people are saying that they don't even know that it exists.
Yeah, I'd say that'd have to be common. I don't know if you've seen that, Roberto, but I'd have to say, a lot of small business owners, might not even know that, this is an option for them. So,
well, within the first 18 months that the SBR regime was announced, there were 80 appointments around the country. Since then, the ATO's receiving 50 per month.
Right.
So the numbers have definitely increased. But when you look at 10,000 insolvency appointments per year, the SBRs is still quite a small fraction, and there should be a lot more opportunities for small businesses to look at this regime.
Yeah, and that's what we're looking at for insolvencies, is it? About 10,000 a year?
Yeah.
Wow. And insolvency is a heck of a lot worse than this, right? I mean, this gives you an opportunity to kind of clear debt and still carry on. What are the other benefits?
I think the thing that you mentioned before was that it's not a get out of jail free card, but it's a better alternative than a liquidation for all parties, because the SBR regime allows the director to continue to trade the business during that period. And if it is successful, it keeps everyone in a job rather than a liquidation. You just have a lot of people losing under that regime.
And it's also an important point if you've got a licence. I know in Queensland we have QBCC, and if you appoint an administrator with QBCC, you're immediately an excluded person. So what I mean by that is you're immediately going to lose your licence.
Right.
So that essentially means you don't have a business if you're in the construction space.
And you can't get back in.
And you're excluded for 3 years.
3 years,
Potentially, yeah. So you won't be able to get another licence for 3 years. Where with the SBR, because you don't actually officially appoint the administrator, you're able to actually do that, notify the QBCC, and potentially work through it without losing your licence.
Right.
Now, in the other states, New South Wales and Victoria, I wouldn't be exactly sure how the licences are going to work in the SBRs, but I know in Queensland that's a big point.
Yeah. Okay. And I mean, what is your advice to people who are thinking about this now, who've perhaps just heard about it for the first time? How do they get their books in order, I guess, and get in touch with the right people?
I think the first thing to do is to engage with your accountant, and your accountant will be able to provide you with advice on your eligibility and be able to introduce you to small restructuring practitioners like myself who can work through what the proposals might look like and the benefits of pushing through with the SBR. So engage with your accountant.
Okay. Got any stories to tell us about the way that some people have benefited from this, or I guess stories from the other side where perhaps people have not known about it and suffered as a consequence?
I was appointed to a company earlier this year in regional Victoria as a security guard business. It was a commercially viable business, but financially distressed, carrying baggage of pre-pandemic debt. So that's rent and other costs when they incurred during the pandemic that they weren't able to trade and pay off. So the option that they had was to continue to trade and make a profit, but all that profit was going to pay off that pre-pandemic debt. The SBR regime allowed them to appoint me. They had debts of around $600,000. They put forward a proposal to creditors of $100,000, and that plan was accepted unanimously by creditors. So creditors received 15 cents in the dollar. The company was able to draw a line in the sand and break away from that pre-pandemic debt and move forward. And more importantly, had that not been available to them, they would have had to have gone through a liquidation process, and their 10 employees would have all have been terminated and lost their jobs.
That's a
So I
great
think
point.
we've seen a picture there where that is a good success story for everyone involved.
Yeah, we've saved 12 people's livelihood at least, right?
Yes.
And future livelihoods, which is also something that you've got to take into consideration.
And we discussed kind of off airs, like if you become unemployed, it's not always as easy to just get back into employment. So,
No, that's
if
right.
those 10 to 12 people are unemployed, some of them might find it really difficult to get a job back in the market.
Yep.
So, keeping those people employed, and saving half $500,000 essentially, obviously that business can now go and flourish potentially and hire more people and, keep driving the economy.
Yeah. And not to mention the burden that would place on society generally if lots and it's just not having that skill set in the market, right?
Yeah, 100%.
Losing people who've got a trade and they know what they're doing, or they've got a small business and it provides a valuable service, being able to keep them going is pretty important at a time when we're labour short in a lot of areas, skilled labour short in a lot of areas, right?
Yep, 100%.
So you can sort of understand why the government's doing this. Why is the ATO, well, how, I should ask you first, is the ATO, how positive are they about it? I mean, are they approving a lot of these? How many are they knocking back?
Look, I'll let Bryn answer this one, but the ATO has been in favour of this regime.
Yeah.
Yeah, I saw some statistics saying that 93% of the packs have been approved by the ATO. I don't know how current those statistics are. I think they were a few months ago. But 93% of the packs that had been put forward to the ATO had been accepted.
Wow.
Which is an amazing outcome.
Yep.
Yep.
So obviously it's policy. I mean, this is the government saying, we've got to support small business. It's part of the COVID, support packages, and I suppose one of the least expensive but most effective parts.
Well, I think so, yeah, because just the case study Roberto said before, the other way would have been going into administration. The company would have cleared all the debts, but, through administration, everyone would have got fired. There's no more drive to the economy for that business. Where if you contrast that to how we're doing here, you're able to, pay some of the debt off, but then keep the business going, keep everyone employed, keep running along and keep driving that economic growth.
Yeah.
Very
important. Roberto, what happens if someone gets knocked back? What would happen then? If I've done all my paperwork, I've gone to my account, I've come to you, we put the pack in, and the ATO says, "No, sorry, where to from there?"
I suppose one of the great things about the SBR regime is that throughout the process, the company remains in control of the director. So should the SBR proposal be rejected by creditors, the company just, again, stays with the director. and then the insolvency options remain with the director as they were. So once the SBR is rejected, he has the option to seek alternate funding from other sources or proceed with a formal liquidation at that point.
Okay.
But at least he's attempted the SBR in the first case.
Yeah, yeah. But you shouldn't let things get so bad before you go and talk to your accountant about this, because it doesn't have to be a crisis situation. It can just be a situation of, this is serious and it's going to have a serious impact on my staff and my ability to employ, my ability to continue as a viable concern.
And I mean, a point Roberto raised there around compliance. You need to be speaking to your accountant. You need to be lodging all of your activity statements. You need to be lodging your super or your SG guarantees. You need to make sure that you're on top of all of these compliance activities. Because if you're not on top of these things and you're a bad taxpayer, Roberto would be the expert, but I'd say that's when you would get rejected by the ATO, because they're going to look at your compliance history, not just what you've done the last month, maybe potentially what you've done over the last period of time. So I think the important part is to be speaking to your accountant regularly, making sure you're up to date on all your compliance activities, and then essentially engage the ATO on whether you can put this on a payment plan and pay it off, or do you need to then go to the next step and look at the SBR?
That's right.
Yeah. So I think this question of compliance is a big thing, because it certainly does seem that the ATO's concern is that they feel that you're engaging. Right? They get a sense that you're on top of it, that you're at least moving towards and progressing. And as long as they feel that you're progressing, then they'll support business. They seem to want to do that in most cases, I suppose. And you'd know. I mean, what's your experience with that?
Yeah, I think that's exactly it. Like when we see the bad stories, it's generally the client that are getting letters or they're getting demands from the ATO and they're not engaging at all. They're, I guess, for want of a better word, they're putting their head in the sand. And they're the ones that generally...
I mean, to be fair, right, if you're running a small business, it is really tough.
It is really tough, yeah, it is tough. But there are options. There are options. So what you need to be doing is engaging with your accountant, then engaging with the ATO and engaging with any of the creditors that are outstanding and trying to come up with some plans and some options. Yeah. Because it's not a good option to do nothing. Yeah. The worst option is do nothing, right? Yeah. At least if you're engaging, you're going to get an outcome. It might not be the outcome you like, but it will be an outcome.
Yeah, yeah. And I guess when you take on the responsibility of running a business, you've got to say, look, I need people. I need my accountant. I need people to help me make sure that I'm compliant. And there is too much red tape. We all know that, I guess. But and it does benefit the big companies a bit having all that red tape, I guess, because they can comply. But smaller businesses have got to also comply. And there are these great programs that can help, and this is definitely one of them.
Oh, this is definitely one of them. I mean, it does give businesses a lifeline, and especially those smaller to medium business. And essentially, at the end of the day, I mean, a lot of economic growth comes from these small to medium businesses. The businesses, like Roberto said, that have 10 employees, a lot of those businesses are the ones that drive a lot of the economic growth. Yeah. Big companies generally don't employ as many people per earnings.
Well, I mean, this is something government, needs to remember too, isn't it? That small business is the backbone of the Australian economy. Right?
It really is, yeah. It employs a lot of Australians and it drives that economic growth. Yeah. So, giving these business owners an opportunity and a lifeline like this, I think is a really good option, and I think it's really commercial. I think a lot of the time it's a good outcome.
Yeah. Yeah, we're seeing 93, 94% of these SBRs approved. So it's regime that is specifically targeted to small businesses, which is really important. And I think we need to raise the awareness of this option available to people.
Roberto, just let me ask you, what are the criteria how would I know if I was eligible or not? I mean, what are some of the things that my accountant would say, well, you've got to have this in order and you've got to have that in order? Understanding your total creditor position, so ensuring that you're under that $1 million mark, but also ensuring that all of your lodgements are up to date. So that's very important. So it's the compliance aspect the ATO is really big on, is making sure that you are at least reporting on time. Then the other one is to make sure that your superannuation and your employee entitlements are paid. So I think that's a good criteria that the ATO has put in there to ensure that employees are taken care of and that super is paid. So those are the three key items to look at. So what if you can't pay that super up? I mean, would they accept it if you were trying to pay, if you were making an attempt to ensure that you've got all your employee compliance up to date? No, so the ATO has been or the legislation is quite strict on this point, that you can appoint the small business restructure practitioner,
but within the 20 business days of the SBR regime, all the entitlements need to be paid within that period.
Right. So there's no leeway on that, which is fair enough. That's protecting employees,
Yes.
right? I mean, you've got to have guidelines around that. Otherwise, it could be used as a tool to exploit employees.
Correct.
And you don't want people doing that. I understand. Okay. How long does the process usually take all up?
So from appointment, the company has 20 business days to formulate this proposal. The restructuring practitioner will advise creditors within that 20 business days, this is the proposal, and this is what the cents in the dollar return might look like as opposed to a liquidation. Creditors then have a further 15 business days to vote on that proposal. So the whole process will be determined within that 35 business day period. The proposal that the companies are able to put forward can vary from a lump sum payment immediate or up to a period of 3 years.
Right. Okay. All right. Well, that's a pretty quick process, really, when you think about it in the scheme of government.
Very fast. Yeah, it's very fast. Like, you get in here and you get this done, and pretty much within a month, you're kind of understanding what the outcome's going to be. So, you're either going to get this good outcome where you can move on, and as Roberto said, you've got 3 years, or you pay it up front, and then you can start running your business again, and you don't have to worry about all this debt and trying to kind of rob Peter to pay Paul to pay creditors off. And then, in this month period, that all gets settled. So,
and reputation's so important, right, in business, obviously in trades and all sorts of small business in particular. So you don't want the black mark of an insolvency or liquidation against you. This is a much cleaner way of resolving things. Is there any record kept of the fact that you've gone through this process? I suppose it is necessary to alert future creditors that you have at least gone through this, but.
So the restructuring practitioner, that is public record, so it will be listed on the profile that the company has gone through an SBR. I'd say there's far less stigma around a restructure than there is a conventional liquidation in that sense.
Well, we had a client that had completed an SBR and they'd went to get finance, so it was on their reporting, and they'd went to get finance, and it was a matter of them explaining what had happened, and they still got the finance in that case. So it wasn't, you couldn't get finance post the SBR. In that situation they did, but they had to obviously explain it to the lender on what happened here and, why that happened and how that occurred, which is probably pretty fair. If I'm a lender, I want to understand, what's happening here as well.
Well, I guess if you're going through the SBR, the lender knows that you are, compliant, attempting to be compliant. I mean, there's certain sorts of, reputation benefit that sort of is demonstrated by the fact that you've taken that step and you've done the right thing and you've kept your business viable and ongoing. So I suppose it's an indicator of good management in a way, right?
Yeah.
So, and much better than having a black mark against your name like a insolvency or liquidation. And the license implications of that.
I think that's the main point, isn't it? Is that you don't have to go to that next level and look at a voluntary administration or a straight liquidation, or you don't have to go to that next level. You've got this intermediate point that you can move to without having, the stigma and everything else attached with that.
Yes, that's right.
So final comments, guys. I mean, Roberto, what's your message to people about this?
I think the SBR regime, it is a great policy for commercially viable businesses who happen to be financially distressed, coming through a really difficult COVID period. That it allows allows directors to draw that line in the sand and provide a good outcome to all stakeholders and maintain their business moving forward.
And Bryn?
Yeah, look, mine is, if you're out there and you're looking at your business and you're stressed out and you don't know how to, pay these debts and this is a real challenge for you, is to engage with your accountant. And to engage with your accountant is to look at your balance sheets, to look at all your creditors, and as I said at the start, work out what options you have. This is one option. It might not be the only option. There may be other options that you can consider, but go to your accountant and figure this out. And if the SBR is good for you, then you can proceed with that. And as we've said, 93% of these things are getting accepted by the ATO. So they are pretty good numbers. If you're a good taxpayer and you've been lodging everything on time, it sounds to me like there's a pretty good chance you're going to get this accepted.
There you go. Well, gentlemen, I think the message is loud and clear for all tradies and small businesses out there. If you're carrying any kind of significant debt, especially tax debt, get in and talk to your accountant without delay about the SBR option. So, Bryn, how can people get in touch with you?
Oh, mate, look, on the website, through our social media channels, straight on the phone, the best ways.
And what about you, Roberto? How can people get in touch with you?
Through the website at hallchadwick.com.au.
hallchadwick.com.au. Well, thanks very much for taking the time to talk to us. We really do appreciate it. And
Thanks,
for being
Damian.
on Tradies Insider and for sitting in that chair instead of this one.
Thanks, Damian. You've done an amazing job.
All right, thanks, mate. Okay, that's Bryn Harwood from Tradies Accountants and Roberto Crispino of Hall Chadwick Accountants. We'll see you next time.
If this content was helpful for your business, make sure you hit the subscribe button and don't forget to click the notification bell. That way you'll get notified whenever I post a video.